All right, ladies and gentlemen, hello. This is me, Darius Anucauskas from Markets.com, and today is Tuesday, ladies and gentlemen. Today is the 20th of May, 2025. So, yes, welcome everyone. Welcome to this recorded session where I wanted to talk about the economic data which is coming out this week. And we do have some important inflation numbers that are coming out. So today, tomorrow, and we'll look into all that. But before we jump into any of the charts, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. So yes, as you know, we do have a somewhat of an eventful week in terms of inflation numbers. So, oh, by the way, also before we go any further, just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, now, look, I wanted to straight away jump into the economic calendar because yesterday we got the European inflation numbers, and I keep on saying that, look, it's not very interesting sometimes to watch the European numbers because the Eurozone numbers, why? Because they kind of come out as expected in a way. So the expectation was for 2.2. It came out at 2.2. The expectation was over plus 0.6 here on the month. It came out plus 0.6. So in a way, it's all kind of as expected. So the core year-on-year number also came out as expected. So in a way. And it kind of happens all the time. So for some, maybe they will say, they like that. It's like it's predictability. However, for some who are looking for that market volatility in the euro, probably are not getting much. But anyway, look. So we got the numbers. What's the most interesting here is that what we should take is that the core has increased. And that's actually something for the ECB to consider because look, this number does not include it does include energy, food, alcohol, and tobacco, basically, and it's kind of pure inflation, that service sector, and the foods. The food is not included here, but in general the service sector. So we're seeing an increase in inflation. The headline inflation is coming out at 2.2, basically unchanged. Well, we know that oil kind of remains in the same kind of range right now, so it's not really pushing higher too much or not really pushing lower too much, so it's kind of stuck in a way. So and of course that has been the case in April because these numbers are for April. So that's one thing. So we're basically on the euro here, on the euro front. We're seeing some a slight push higher, but I think that this is coming mainly from the weakness of the U.S. dollar right now. Because again, if you look at the U.S. dollar very quickly, then yes, we have been on a little bit of a slide. However, we're approaching key support zone right here, so let's see if we can stay above this. I mean, we already approached that yesterday when we stayed, so let's see if we can stay once again. If we do, then okay, great. Maybe we could see a reversal back up here and push lower on pairs like Euro USD or GBP USD. But again, for now, it seems like we're planning to move higher here. If we do pop above that 1.1264 zone-ish, then yes, I will continue targeting the upside. And the thing is that I think that the euro is pushing nicely to the upside just because, again, the core came out at 2.7. This kind of puts the ECB in a little bit of a pickle because the ECB continues to go for those rate cuts, and now they would probably need to slow down the pace in a way. So, inflation started picking up again because their inflation target is around 2%. So yeah, they were saying that it's not really dropping. Yes, the headline is it's closer, but the core suddenly pushed back up. Now, in terms of other inflation numbers this week, we're getting the Canadian number. Now that's an interesting one to watch because look, okay, the core, we don't have really an expectation unless I'm gonna look at another another source to see if there is some sort of a forecast at least for the core year-on-year number, core year-on-year. Okay, expected to drop a little bit to 2.1. However, we'll see what's going to happen there. Okay, yes, it could be the case, yes, because the headline year-on-year inflation is expected to decline quite significantly, in my opinion. I mean, that's quite a drop. But okay, I mean, look, if that's the case, then I think that it's kind of putting the Bank of Canada towards that position where they will continue with their rate cuts. At the moment, their interest rate is sitting at 2.75, so they have been quite rapid in terms of cutting rates. But 2.75, it is already, let's say, on the lower side in comparison to their big neighbor, which has the interest rate set at 4.5. So Canada continues to try to boost the economy, and by looking at this, it seems like we need to do so, because look, inflation is really dropping, and okay, on one hand, some might say, well, maybe it's good, but on the other hand, when you're seeing such significant drops, such significant forecasts, let's say, then it's showing that the economy is maybe stagnating a little bit, and there's no really growth, because we need a little bit of inflation to be, let's say, around maybe 2%, 3%. It's kind of showing growth in that case, So when inflation is maintained, it's kind of one of the indicators that's showing that, look, the economy is growing. There is progress and everything. However, when you see something like this, like a slide, then this is where the market should kind of start worrying a little bit. And if we do see the numbers on the lower side in Canada, their inflation numbers, well, we could see some weakness in Canadian dollar. And looking at this picture here, I mean, technically everything's kind of really pointing towards a little bit of an up move here towards this downside line taken from the high of the 3rd of February. And okay, this is where I'm going to aim for first. Here I have my 100-day EMA sitting, so I will, it might kind of coincide nicely with this downside line, so all the stars could align perfectly. But if somehow inflation does come out, let's say on the higher side, let's say it comes out, higher than the forecast, let's say at maybe 2%, or and the core inflation, there we go, year comes out also at around the same number as previous. Well, then maybe we could be enough to strengthen the Canadian dollar. Maybe it could be just a little temporary boost or something like that, because if, let's say, we still come out higher than the forecast but lower than the previous, then the market will pick up eventually, say, you know what, actually I'm not buying this. I mean, I think that it could still have its negative effect at the end of the day on the Canadian dollar. So that's where, like I said, that's where the USD CAD could push back up here. But in general, I'm getting a little bit more comfortable with the upside only on a break of this downside line. However, I'm not going to be that awkward guy who's going to deny that there could be something like this, that we could still see a push towards the upside, towards the downside line and these EMAs. And then we'll take it from there. If we do drop below the 1.39 zone and we stay below it, I'm going to lean a little bit more towards the downside. Now, in terms of other inflation numbers, let's have a look very quickly, because we know that Canada is also delivering its PPI figures. So we'll have the Canadian Consumer Price Index, and we're also now going to have the Producer Price Index, which at the moment I can see that there is no forecast. Even if I'm going to refresh this, let me just double check very quickly. Is this going to be giving me? No, it's not really going to give me anything. So that's why I revert to my other calendars just to double check. Okay, the PPI year on year is expected to come out the same at 4.7. Okay, let's see how that's going to play out. But this is the interesting bit. So the PPIs are expected to come out kind of on the same in the same area. Even, let's say, okay, the month-on-month is expected to decline a little bit, but the year-on-year figure is expected to come out the same at 4.7. So there is concern that, maybe actually, this forecast here, where is that? Canada, there we go. This forecast for the year-on-year CPI is maybe a little bit on the lower side. Maybe we could see something in between here. Let's see how that's going to play out. So That's in terms of the Canadian inflation numbers. Now tomorrow, Wednesday, we're getting the UK inflation numbers as well, and those are expected to rise a little bit, as you can see here. So the year-on-year inflation here, the headline inflation is expected to come out at 3.3, higher than the previous. Core is also higher than the previous. So in a way, we're having slightly opposite thing here. And to be honest, look, the Bank of England's inflation target is around 2%. So we're really jumping above that, and this is not really like indicating growth. No, on the contrary, this is showing that there could be a loose moment if the government does not do anything, and the BOE does not, kind of have a different approach. However, I think that BOE is kind of a little bit late to the game. They were trying to go for those cuts, and their current interest rate sits at 4.25. Look, they did make a cut last time, but it seems to me like that they're a little bit too late. So they should have cut earlier. And right now, the fact that if inflation continues to rise like this, it's as if I'm denying the fact that inflation is picking up. I'm still cutting rates. And so what do you want? Do you want inflation to go like towards 4 or 5%? Well, I think that that's a little bit unsustainable. Well, it's sustainable, but like not really pleasant to have, in my opinion. So that's why there could be some positivity here on the pound. But again, short term, but then later on, maybe, like I said, maybe we'll see the US dollar kicking in, and it could really spiral in a negative way for the UK economy. Let's see how that's going to play out, of course. But for now, purely from the technical perspective, GBP USD seems to be forming something of a possible ascending triangle pattern. However, a confirmation break is still needed. So look, I mean, if we want to go higher, a push above the 1.3440 zone here ish it would be nice. This way, potentially more buyers could join in here, and yeah, we could travel towards that 1.35 with 1.36 zone, and so on and so on. But at the moment, we're near key resistance, which is the highest point of September of 2024, or in general the highest point of 2024. We did surpass that briefly in the beginning of at the end of April. How we didn't have enough steam, or should I say the bulls didn't have enough steam, but let's see if they can do it right now. But again, we're carefully monitoring the inflation numbers here. If those come out somewhere similar to the forecast, then yeah, okay, we could see GBP kind of accelerating on that. But let's like I said, let's not rush into things. Let's not rush into conclusion. For now, we're observing the price action, and if you are trading something the pound related, or let's say specifically GBP USD, then be careful, because like I said, for now we're just stuck in this formation and we're waiting for a little bit of clarity. So for me, the clarity would be a clearance of one of the sides of this ascending triangle pattern. So, and yeah, in that case, I mean, in case of inflation, let me just double check on Friday. Are we getting the Japanese inflation? We're getting right. So, okay. Now, the Japanese inflation is also very interesting. So the core year on year is expected to rise a little bit. Let's have a quick look here. So, okay, look, I mean, the Bank of Japan has been on this kind of path where they're interested in hiking interest rates. So for them, seeing higher inflation is kind of like, hey, great, and oh, that's too bad. We have to go for a rate hike, But that's what they want. They need to strengthen the Japanese yen. If we look at the USD JPY situation, look, they really enjoyed the moment when everybody was just buying Japanese yen, because the stock market was kind of, collapsing in a way. So especially at the beginning of April. Now we're seeing this yen buying again. So that's why the bank, the BOJ, is not really, let's say, maybe bothered about way too high inflation on their side, because if the stock market goes down again, they're kind of betting on the stock market to go down because then everybody will jump into the Japanese yen and they can stick with their plus 0.5% interest rate. But again, I think that they would prefer to drag it a little bit higher. However, again, why do you need to do that if your Japanese yen is enjoying the moment? Because the whole world is kind of buying it because they're treating it as a safe haven. So, long story short, I think that it's going to be quite interesting to see where we come out. If we somehow come out on the lower side, let's say it's below the 3.2, below 3.6 here, then that could actually spill into something negative for the Japanese yen, and we could see USD JPY actually pushing back up. So keep your eyes on that. Again, that's only Friday. We still have a few days to go, so let's not rush into things. For example, AUD JPY here as well is it's currently balancing above the downside line here, the broken downside line. So there is still hope that we could see this one reversing back up, and we know that this is our risk on, risk off monitor, unless it starts falling somewhere below this 92 zone. If it starts falling below the 92 zone, I'm putting my slightly bearish hat on. So, ladies and gentlemen, that's it for this little session. I just wanted to pick up on the inflation numbers which are happening this week, and I think that this is it was worth mentioning. And like we do have an interesting period or an interesting week for forex traders. So because of inflation, and let's see how all this is going to play out. My name is Darius Anucauskas. I hope you enjoyed this session. Thank you very much for watching and listening. Please do comment, please do like, and really that would really help us out. In terms of comments, let me know what you think, if you agree or not. But hey, thank you very much, and I shall see you next time in my next top news update. So as always, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. I'll see you later. Bye-bye.